Hi investors, welcome to SOIC. So in today's video, we'll be talking about the story of Bajaj Finance. Whether the Bajaj Finance compounding growth engine will continue or whether the growth engine will falter.
करीब 7-8% का जो फॉल हमने देखा है बजाज फाइनेंस के स्टॉक में आज
whoever over a longer period of time has bet against Bajaj Finance's performance has proved to be wrong.
काफी दिनों से अंडर परफॉर्म भी कर रहा है स्टॉक, तो यहाँ पे डेफिनेटली केस बनता है पॉजिटिव होने का स्टॉक को.
But before starting the analysis, today I will be teaching you about NPA accounting. This is a very simple concept which is unnecessarily made complex by a lot of analysts. So let's simplify this concept for all the retail investors. If you are excited for this video, just drop a hell yes in the comment section and also smash the like button and subscribe to the channel. So let's start with NPA accounting. And what is NPA accounting? So NPA in simple term means non-performing asset. So assets for a bank are the loans that which a bank gives out. And if the loans and the interest stop coming back for a bank, then it is termed as a non-performing asset. So how does the accounting for non-performing assets work? So what ended up happening in 2014 was that a lot of banks were evergreening their loan portfolios, that they weren't showing the true picture of the NPAs that they had. So RBI introduced a non-performing asset accounting in which you had to create 3 buckets. So what are those 3 buckets? That is SMA bucket 0, second is SMA bucket 1, and third is SMA bucket 2. So let's see how the accounting works. So this is delay of principal and interest. Now suppose if a borrower, now let's take your example, suppose if you do not pay Bajaj Finance back in the first 1 to 30 days, if there is a delay, right? So what is the full form of DPD? Day past due. So what ends up happening is that you have to pay back the principal and the interest, but you end up delaying the payments. And how much delay do you do? That is between 0 to 30 days. As per the installation date, suppose if you have to pay the EMI at 10th of April, but you haven't paid the EMI at 10th of April, but you pay the EMI anywhere between 11th of April till the next 30 days. So the loan amount that is due to you will be classified as SMA bucket 0, right? So the loan amount will go to SMA bucket 0, that is special mention account bucket 0. Now what ends up happening is that you are further not able to pay till the 30th day. So that is between 0 to 30 days you aren't able to repay the loan and interest. So what ends up happening is that on the 31st day, this principal and interest delay will move to SMA bucket 1. That is between 31 to 60 days of non-repayment of loan and interest, right? Now again you are not able to pay the principal and interest to Bajaj Finance, let's say, and this time what will end up happening is that this again principal and interest delay will move from 31 to 60 days to 61 to 90 days. That is the third bucket. So what did we learn? That is SMA bucket 0, SMA bucket 1 and SMA bucket 2. Now just imagine the usage of this accounting terminology. Because if a lender is giving very aggressive loans, then his SMA bucket 2 at all the times will be really high. Because only after 90 days of principal and loan not being repaid, the asset turns into a gross non-performing asset, which is also known as GNPA. So what we end up looking at is GNPA. But what smart investors also check is how much of the loan is there in SMA bucket 1 and how much of the loan is in SMA bucket 2. Because a bank or any investor can early recognize the stress in the bank's books. The same accounting method works for NBFCs, same accounting method works for banks. Now let's see what ends up happening if you do not pay the loan for 90 days and what ends up happening if it turns into a non-performing asset. Now what ends up happening is that you do not make the payment even on the 90th day. So you haven't paid back the principal and the interest. So now the loan moves into a gross non-performing asset. that the asset hasn't paid back for the 90 days. So now RBI will ask you to classify this as a GNPA. This is what the meaning of GNPA is. Even in GNPA, we have three buckets. So what is the first bucket in GNPA? That is substandard assets. That is NPA for up to 12 months, that the payment hasn't come for up till 12 months, that is 1 year. Then from substandard assets, suppose if you do not pay back the principal and the interest for 12 months, then where will it move to is doubtful assets. That more than 12 months have passed, but still the asset hasn't paid back any principal or interest. Then finally what will end up happening is that after this period, this will end up becoming a loss asset, that the money is never going to come back, and here again the principal and the interest will move to this bucket. So this is how NPA accounting works. Now what Bajaj Finance does is something that you need to realize, that why this NBFC has won over the other NBFCs and why this has been such a huge wealth creator in last 12 years. Is that after 5 months of principal and interest not coming back, after 5 months of principal and interest not coming back, what does Bajaj Finance do? It completely writes off the loan. Is that the loan has been completely written off? Is that the loan didn't exist for us and the loan has been completely written off? This is what Bajaj Finance does. But what most of the other lenders do is that they keep extending and pretending. So this is what conservative accounting means. Now here we'll talk about what are the 4 reasons why Bajaj Finance succeeded, and then afterwards we'll talk about that what are the 3-4 key reasons is that why Bajaj Finance stock has been going through a period of painful time correction. So if you look at GNPAs for Bajaj Finance in last decade, so GNPAs for Bajaj Finance in last decade reached the highest of 1.79% in FY21. Right? Whereas throughout the decade, the GNPAs, that is gross non-performing assets, the money that hasn't come back for the 90 days, is actually anywhere between 1.2 to 1.5%, which is very low for a lender at an AUM of more than 2 lakh crores. If you look at write-offs plus GNPAs as a percentage of AUM, because I told you that Bajaj Finance is very aggressive in writing off loans, then you will find that in FY21, when COVID came, this percentage reached to almost 5.42. So why is Bajaj Finance able to handle so much pain? Simple reason is, look at the asset under management. That is how many loans have you given and how much assets you are managing currently. So asset under management has grown from 24,000 crores to 2 lakh crores in last 8 years. So that is a compounding of more than 35 to 37%. So this is the reason why that Bajaj Finance has been immensely profitable, because as and when your asset quality goes bad, you keep disbursing more and more loans. And how are you able to disburse more and more loans? Because you have a lot of data and your underwriting is also very, very efficient. Also, if you look at this data, that is 1 day past due, that after the first day, the loans didn't come back. If you look at this data, then Bajaj Finance in NBFC industry is by far the best and it's a gold standard. If you look at 1 plus DPD for Bajaj Finance, it is anywhere in salaried personal loans, it's anywhere between 0.2 to 0.4%. Whereas rural lending, when COVID came, it went till 2.23%. Home loans also it is less than 1%. Digital finance is also less than 1%. Whereas if you look at consumer durables, it is less than 1.5%. In small business loans, it is also less than 1.5%. In personal loans cross-selling, it is less than 3%. Only in two-wheeler and three-wheeler financing, it is more than 14 to 15%. But even in two-wheeler and three-wheeler financing, even though the loans haven't been repaid on time, that is, suppose if I had to pay loan in first 30 days, but I'm paying after my basically date lapses. So even in two-wheeler and three-wheeler loans, they are able to recover back the money, because that is one of the captive units that Bajaj Auto has, because Bajaj Finance finances all the two-wheelers and three-wheelers of Bajaj Auto. So this is why Bajaj Finance has been such a hallmark franchisee over the last 10 years, because they are able to handle the asset quality much better than the other NBFCs. And let me show you one more data point to prove this point. So during the time of COVID, there was loan moratorium which was given by RBI. So loan moratorium means that you do not have to repay the loans for a while. If you look at the data, only 15.7% of Bajaj Finance's AUM was under loan moratorium. Whereas for Cholamandalam, this was 74% because they deal much more in cash because they're financing trucks. Yield wise, this was 44% in retail portfolio. IIFL Finance was 60% because again they're dealing in cash and also they have gold financing. IDFC First Bank was 35%, whereas ICICI Bank was 30%. So this just again shows you that even during the time of COVID, Bajaj Finance had one of the best moratorium datas. It could also be because of the product mix, but it also shows you that they are very strict when it comes to taking back the money. Because giving money is easy, but taking back money is more difficult. So this is why in terms of asset quality, Bajaj Finance actually stands apart from other financiers within the Indian lending space. Now let's look at the other reasons for success. So second reason comes from Bajaj Finance ability to manage crisis much better than other financial companies. So Warren Buffett keeps on saying is that a bank or an NBFC is a business that any stupid man can do. But what you need to avoid is taking reckless risks. So in 2018 and 2019, ILNFS, DHFL and other NBFCs took reckless risk. What did they do? Is that is asset liability mismatch. So what is the meaning of an asset liability mismatch? Now suppose if I take money for 6 months from any one of you, and if I take that money and lend it out for the next 3 years. Now currently the market environment is so good that you will keep saying koi kuch nahi hota. You can keep basically rolling over this 6-month loan that you have to pay me back. But all of a sudden the market environment turns to a very bearish sentiment and the liquidity condition tightens. Now you come to me and you say, remember that I paid you money for 6 months, now I need that money back, I won't be rolling over the loan. So at that point of time, I'll have to pay you the money back. But what has happened is that I've given that money out for the next 3 years. This is known as asset liability mismatch, and this is also what happened in the case of Silicon Valley Bank as well. So what happens is that a lot of lenders, when the going is good, they end up creating ALM mismatches in their business models. So this is what Mr. Rajeev Jain, who's the MD of Bajaj Finance, had to say on this. This is way back in 2019. So Mr. Rajeev Jain said, we had been showing ALM data for the past 5 years. 2 years ago, nobody paid much attention to it, so we pushed it back as an annexure in our presentations. Now when investors ask for it, I tell myself, thank God I did not treat ALM as an annexure to my business model. And why is it so? Because if you look at the ALM mismatches in ILNFS and DHFL, so you will just see that ILNFS and DHFL both reported massive losses. And also they defaulted on their commercial papers, and also they defaulted on intercorporate debt, and also they defaulted on a lot of other debt that was outstanding. Whereas at the same time, if you look at ALM management by Bajaj Finance, that you will see there's always a surplus. That if you look at cumulative gap up to 1 year in FY14, it is 141%. A cumulative gap up to 12 months, it is 4%. Whereas if you look at the cumulative gap is much above than the permissible limit. That is the inflows of money. That is, inflow of money is much higher than the outflow of money. So if your inflow of money is much higher than the outflow of money, in your business model, there will never ever be an ALM mismatch. That is known as asset liability mismatch. But if your outflow of money across all time frames, that is 1 month, 3 month, 6 month, 12 month, 3 years and 5-year asset classes is much higher than the inflow of money, then you will end up creating an ALM mismatch. And whenever an asset liability mismatch happens, these are known as accidents waiting to happen. Is that on this road many accidents happen, but you trust yourself that no accident will happen. But all of a sudden the environment changes, rainfall starts, like liquidity conditions tighten up, and all of a sudden an accident happens, that is ALM mismatch. So Bajaj Finance in its business model has inflows which are much higher than the outflows. So this means that there is no ALM mismatch. Actually across the buckets it is in a condition of surplus. So this is the second reason why that Bajaj Finance has succeeded, because a lot of NBFCs in last 5 years failed to recognize this problem. Now before going forward, there are 5 key questions which a retail investor has. So the first key question that a retail investor has, that he wants to know that how can he start investing from scratch. That is, how to make a financial plan independently. What is the importance of a will? Do you know, in today's Indian context, out of 100 court disputes, 70 of them happen because of property and lack of will. So we'll be teaching you also how a will is important and how you can get your assets secured for the future. Third thing that we'll be teaching you is that what are the different types of asset classes which are available for a retail investor to invest in, and finally the basics of investing from scratch. Second key question that a retail investor has, that he or she wants to learn accounting or the language of business from scratch. So in our SOIC intensive course, we have taught you accounting and the language of business from scratch, and this one is available both in Hindi and English language. And in this course, we have also taught you how cash flow statement works, how a balance sheet works, how you can find fundamentally strong businesses as well. The third key question that for a retail investor arises is then how to value a company. So Ishmael, you've taught us financial planning, you've taught us fundamental analysis, but how to value a company, how to find intrinsic value of a company, and how to buy and sell stocks, basically when to buy and when to sell fundamentally. So that is what we've taught you in the third course, that is how to value a company or how to find intrinsic value. Finally, the fourth question that a retail investor has, then we have learned first three things, but how to precisely find the points of buying and precisely find the points of selling. So how to make selling as easy as possible. So in the fourth course, we have taught you when to sell, when to buy, and when to average using some of the technical tools for fundamental investors. And finally, the fifth question that a retail investor has is that how to find a stock. And in this course, we have taught you how to find a stock and how to screen for stocks. All these 5 courses are part of one SOIC membership, and for those who are watching this video, if you really want to become an independent investor, so this is a journey of next 1 year that you can join with us, and we keep conducting live sessions as well. Is that in the month of April we have 4 live classes for our SOIC tribe members. And if you want to subscribe to the membership, then link to subscribe is there in the description below. And you can also use SOIC bonus 10, and it is purely meant for those who are watching this video. So you can use SOIC bonus 10 for a 10% off on the SOIC membership. Now coming back to the analysis. Now the third reason for success for Bajaj Finance is that Bajaj Finance successfully identified a white space within the market. So what is a white space? So white space are those spaces which are vacated by the competitors, or these are those spaces where a competitor doesn't have its attention. So what ended up happening post 2009 crisis is that both ICICI Bank and Cholamandalam exited the personal finance or the consumer durable financing business. Because ICICI Bank, the business that they built between 2006 and 2010, entirely blew up between 2011 to 2012. Why so? Because they had to write off nearly 25% of their personal finance loan book, the loans that they gave directly to the consumers. So that was the extent of write-off they had to do. And secondly, example of Cholamandalam. Cholamandalam did a tie-up with DBS, and DBS had an expertise in consumer finance, but also over there the underwriting standards were very, very lax, due to which even DBS and Cholamandalam, the partnership ended up breaking up, and again one of the key competitors exited the market. So national banks weren't focusing on this business of personal loans and on this business of retail loans and on this business of consumer durable financing. So at this point of time, there was a demerger which happened in Bajaj Auto. So Bajaj Auto got separated into 3 companies. One is Bajaj Auto, second is Bajaj Finserv, and third is Bajaj Finance. And Bajaj Finance started focusing on consumer financing or financing for consumer durables, that is financing TV, fridge, washing machines, and also giving personal loans. So this is how Bajaj Finance identified a white space, because during that point of time, if you look between 2015 to 2016, actually the loan given for personal loans within the Indian industry actually started falling, whereas housing loans were more or less intact and industry loans also fell. This is the point of time between 2010 to 2020, Bajaj Finance got a clean run, that is in the market of personal finance and retail loans. So now a key question arises is that how does Bajaj Finance make money on no cost EMIs? So you go to a Chroma store or you go to a Vijay sales store, you will always see a Bajaj Finance representative is sitting over there and he's always offering no cost EMIs. So how does Bajaj Finance make money? So Bajaj Finance simply does this, is that Bajaj Finance acts like a platform between the manufacturer and the customer. So who is the manufacturer? Manufacturer is Samsung, LG, Panasonic and other such consumer electronic companies. And who is the customer? People like you and me. Now suppose if I go to a store and if I buy a smartphone and I get it financed by Bajaj Finance. Now if I paid 60,000 rupees for the smartphone and I got it into 6 EMIs, that is 10,000 rupees a month. So Bajaj Finance will make money through 2 ways. first way Bajaj Finance will make money is that Bajaj Finance will charge me 1%, that is 600 rupees for basically as a loan processing fee. So that is 600 rupees that Bajaj Finance ends up charging me. And second way Bajaj Finance will make money is that Bajaj Finance will pay this entire 60,000 upfront to the manufacturer. Let's say example of Apple. And Apple will give a 5% discount to Bajaj Finance because of this. So Bajaj Finance will actually get the phone for 57,000 rupees because they've paid the money upfront, and actually we'll be paying Bajaj Finance a 600 rupee loan processing fee. So this is how Bajaj Finance ends up making money. So manufacturer is paying 5% to Bajaj Finance, and you as a customer are paying 1% as loan processing fee. So this is a win-win business model because manufacturer can get more and more products sold because it's a no-cost EMI, whereas you as a customer can get no-cost EMI actually by just paying 6 installments and just by paying 1% as loan processing fee to Bajaj Finance, which will be close to 600 rupees. So this is how Bajaj Finance ends up making money. And in this entire model, or in this entire loan, Bajaj Finance will make an IRR of more than 20%. That means that Bajaj Finance will make more than 20% return just on this loan. So this is how the business model works, and this is how they've scaled the business model, because they've applied this in washing machine, they've applied this in TVs, they've applied this in smartphones. Any consumer electronic item purchased offline, you will see a Bajaj Finance representative will be sitting over there. So this is exactly the white space that Bajaj Finance ended up attacking. So now the key question arises is that in this case, why won't a manufacturer end up tying up with other NBFCs? It will, but Bajaj Finance already has a very wide geographical presence. So it is present throughout India. And if you look at the number of locations that Bajaj Finance has, so you'll be surprised to know is that currently in terms of their active distribution network, they have distribution network in more than 1,43,900 locations. So suppose a Samsung or an Apple comes, they just need to tie up with one Bajaj Finance and they'll reach 1,44,000 locations automatically. Also, second entry barrier in this business is that a lot of customers have already purchased something from Bajaj Finance. So just look at the number of customers that Bajaj Finance has. So in terms of number of customers, they have currently 66 million customers, and out of which 38.58 million customers have purchased more than one product from Bajaj Finance. Because over the years, if you see, Bajaj Finance ended up launching much more number of products. Recently, they've also entered rural financing. They're also going to enter gold finance. They're also going to enter microfinance. So they just didn't stop at personal loans or two-wheeler or three-wheeler loans. They ended up launching so many more products to cater to the customer needs and to cater to the retail needs. This is why their cross-selling franchisee actually itself can do 3,000 crore of PAT some 3-4 years down the line. So this is how the business has moat, and this is the competitive advantage of it. Fourth reason why Bajaj Finance has done well over the years is simply because of management. So when Sanjeev Bajaj took over the Bajaj Finance as a Bajaj Finance managing director, after a widely publicized basically demerger between Bajaj Auto, Bajaj Finserv and Bajaj Finance, so Sanjeev Bajaj got all the financial business, whereas if you look at Mr. Rajeev Bajaj, he got the Bajaj Auto business. So what ended up happening is that Bajaj hired the veteran banker by the name of Mr. Nanu Pamnani. And Nanu Pamnani had a vast experience of managing the retail product portfolio of Citibank. And he also brought along with himself a vast experience of managing retail portfolio. And they ended up hiring Mr. Rajeev Jain, and Rajeev Jain had remarkable execution capabilities because he already managed the retail portfolio of GE and American Express and also worked at AIG. So this is how they got the management acumen, and till today Rajeev Jain is the MD of Bajaj Finance. And if you look at some of his quotations from the con calls or interviews, you will obviously find that he's a very, very clean thinker and he's a very, very broad thinker over the next 4 or 5 years what will happen in the lending space. So he keeps on giving his insights. So in their presentation, they've also given this insight. So in the next 5 years, the Indian lending landscape will grow almost to 2,30,000 crores, currently from 1,20,000 to 1,30,000 crores. So their presentation is also one of the most detailed in the industry. Now, all this management, white spaces, controlling ALM mismatches, and also we spoke about controlling the asset quality has resulted in an AUM CAGR of more than 35% in the last 15 years. And if you look at other financial data, you will also find is that the profit after tax has grown at a CAGR of 51% in the last 15 years. And if you look at the profit before tax, that has also grown at a CAGR of 51% in the last 15 years. So this has been the story till now, and these have been the thesis pointers till now. But first time what has happened over the years is that Bajaj Finance stock price has been going through a period of time correction. And for the first time in the last decade, Bajaj Finance stock price has started underperforming Nifty. If you look at the relative strength line below, you will see that the relative strength line has gone below zero. This means that Bajaj Finance stock price has started underperforming Nifty. And this has started happening for the first time continuously in the last 6 months. So what is it that the other market participants are saying, which we stock market investors are not able to understand? So now coming to the antithesis pointers. Thesis pointers we have discussed, and now coming to the antithesis pointers is that why maybe it might not be the fast grower like it was in the last 15 years, where it saw 51% CAGR in its profit after tax. Now let's look at the reasons that why the growth rates might slow down. So now coming to the antithesis pointers, and point number one. So what is the point number one? Is that incremental products that Bajaj Finance is launching might have a lower return on equity and might have a lower return on assets. So if you look at the subsidiary of Bajaj Finance, that is Bajaj Housing. So Bajaj Housing has built more than a 60,000 crore AUM in a very less period of time. I think it has become country's third largest or second largest housing finance company in a very short period of time. But problem with housing finance is that housing finance is a lower return on equity and it's a lower return on asset business. That is, it's a lower profitability business than the existing business of Bajaj Finance. In the existing business of Bajaj Finance makes a 3.5% ROA. Whereas if you look at the business of housing finance, then you see first it's very cutthroat competition. Second is that the return on asset for Bajaj Finance over here is close to 1.5%. Whereas for Canfin it is 1.9%, HDFC Limited it is 1.8%. If you look at return on equity in this business, for Bajaj Finance is currently somewhere close to 11%. Most profitable housing finance company actually in terms of ROE in listed space currently is IFL Housing, which has a ROE of 24%. Whereas if you look at Aavas, it is 14%, HDFC Limited it is 14%. But why the ROE for Bajaj Finance Housing Company cannot go beyond 20% is because unlike IFL Housing, which is in tier 3, tier 4 cities, and it is in very less size average ticket size portfolio, that is you are giving loans below 15 to 17 lakh rupees, right? So in case of Bajaj Finance, the average ticket size for housing finance is much higher. So they end up competing in tier 1 and tier 2 with the likes of Canfin, with the likes of HDFC Limited. So your return on equity will always be capped. And this is how we can see is that in their long-term guidance, so they have given a long-term guidance that is for the next 4 to 5 years. So if you look at their long-term guidance in their housing finance business, you will see that they've guided for a return on equity between 13 to 15% because they are present more in tier 1 and tier 2 cities where competition is much higher. Return on assets also they've guided between 1.7 to 2%, whereas growth can be higher over here in this business, that is 26 to 28%. Now this is with the housing finance business. Now coming to the core business of Bajaj Finance itself. So in Indian landscape, actually there has never been a precedence where any NBFC or any financial has grown at more than 20% for such a long period of time. So the second scenario arises is that the growth on a lower base, that Bajaj Finance went from 24,000 crore to more than 2 lakh crore AUM. But to go from 2 lakh crore AUM to 6 to 7 lakh crore AUM will put you in competition against a lot of large and pan-Indian banks. Now, if you start competing with pan-Indian banks, you are at a disadvantage. Why so? Because Bajaj Finance is an NBFC, that is non-banking financial company. Whereas banks like HDFC Bank, Kotak Bank, ICICI Bank, Axis Bank, they have access to what? That is CASA, current account and saving account. Because you and I can go to a bank and open a bank account. And if I keep my money in a current account, banks don't pay me anything, right? It is literally free money for banks to use. Even in a savings account, if I'm just depositing the money, I barely get 4-5% as rate of interest. So again, this is a disadvantage because Bajaj Finance, whenever it basically takes term deposits from retail investors, then they have to hire a higher interest rate for them to attract term deposits. So this is why cost of capital for banks is much lower than Bajaj Finance. But because Bajaj Finance is an NBFC, so it has much less regulatory scrutiny as compared to banks, and this is why it can innovate much more. But as the size grows, as you want to grow from 2 lakh crores to 10 lakh crores or 8 lakh crores, you will start competing a lot with banks because you want to increase your market share currently, which is close to 2% to 4% or 5% in a growing industry. That will put you against a lot of banks, and banks have lower cost of funds versus Bajaj Finance. So this is why what has happened. If you read the recent con call, so in his opening remarks, Mr. Rajeev Jain said is that banks have become very competitive, or there's a lot of competition for retail loans because everyone wants to do retail loans. So there's a lot of competition that has increased. And in the next 4 years strategy, that is by FY27, Bajaj Finance has given a guidance of 25 to 27% AUM growth, which used to be more than 35%, mind you. It has been more than 35% for the last 15 years. And they have guided for a profit after tax growth of 23 to 24%, which used to be 51% for the last 15 years. So these are the key differences why that Bajaj Finance stock price has been going through a period of time correction. Because the fast growth days of the past maybe aren't there for the future as well, because now the base size has grown. In the beginning, the base size used to be 10 or 20,000 crores, but today the base size is more than 2 lakh crores. So this is also one of the key antithesis pointers, is that now you have to treat this company as a large organization where growth rates will even further fall going forward. But unlike the past where the growth rates were more than 50%, now maybe the growth rates will be somewhere between 22 to 23%. And this is a readjustment that Mr. Market has started making. You can already see that in the valuations of the company. So average price to book. So we value banks and NBFCs on the basis of price to book. So average price to book for Bajaj Finance has for the first time fallen between the median price to book. That is, currently the price to book is less than 8 times, whereas on an average Bajaj Finance used to get a price to book of 8.3 times. So Mr. Market is telling us as the growth slows, maybe the stock keeps going through a time correction and maybe it turns into a compounder from a fast grower. So this is the expectation readjustment that is happening in the current stock. So this is something that Bajaj Finance investors have to take this information well and have to digest this information as well. And also last key antithesis pointer is that if Bajaj Finance ends up becoming a bank, because eventually that is probably what is going to happen 5 or 10 years down the line, because you will become so big, then it might become difficult for you to remain a standalone NBFC. Because even RBI in 2020-2019 declared that it wants large NBFCs to end up becoming banks because they can be systemic risk, because you want your liability side to be very, very secure, that is through deposits. If Bajaj Finance ends up becoming a bank 5 or 10 years down the line, what will end up happening is that you will have CRR and SLR requirements, is that you will always have to park a certain amount of money with RBI. And secondly, whenever NBFCs turn into bank, you also need to upgrade your branches. You also need to upgrade your branches as per the regulatory requirements. So what ends up happening is that your cost to income in the near term ends up increasing. And third thing is that at this base, there is no bank which is making more than 15 to 17% ROE. So your return on equity will also end up falling. And there is no bank in India which gets more than a 4 to 5 times price to book. Maybe AU Small Finance Bank is the most expensive bank which is listed in India. That is at 5x. So also the multiple can derate if that ends up happening maybe somewhere in 5 to 10 years. So you have to take all these data pointers and now think that why the stock is going through a period of time correction. If you are interested in Bajaj Finance, or if you're a Bajaj Finance shareholder, do let me know in the comment section below whether the thesis outweighs the antithesis, or whether antithesis pointers are genuine and you should consider them in your thesis for investing in Bajaj Finance. Because you can simply create a financial model, take the book value and value it on the basis of 6x price to book, 5x price to book, and you can simply see that it will be a compounding outcome and not a really fast growing one. So in conclusion of the video, we learned that how Bajaj Finance has been such a huge multi-bagger. That is purely because of management and their ability to manage risk, and also to keep launching new products which very few NBFCs or financiers have shown over the last decade. But secondly, we also looked at that what are the key antithesis pointers is that the base size has now increased, is that now they're competing with banks in a lot of incremental products that they're launching. And finally, we also learned is that their cost of funds are higher than a bank's cost of fund, and what can happen if they end up becoming a bank. So these are the thesis pointers and these are the antithesis pointers, and I would just say is that no doubt the organization has been superb in the last decade, and it is one of the best financial business models that has ever existed in the Indian markets. But we have to keep taking in new information because the markets work on future and they discount the future. So this is where the idea of weighing risk and reward will help you a lot. And hopefully if you loved this video, just drop a loved it in the comment section below. And if you like watching our analysis, also like this video and subscribe to our channel, because we'll keep analyzing multiple such businesses in the future going forward as well. Thank you so much for joining us. Hopefully see you in the next business analysis of SOIC. Jai Hind.